Welcome to the new member webinar at Credit Innovation Group. My name is Katie, and I'm so excited that you came to the new member webinar. But I also want to congratulate you on starting your process with Credit Innovation Group. It is a huge undertaking, but it is insanely important. So we're going to talk about a lot of the pieces that comes with your membership. The reason we kind of need to do this separately is there's so much to go over. It's hard to cover all in one phone call with your specialist or a couple different interactions with them. So we're going to talk about some of the big pieces of why we do what we do and what you can do to get the most out of your membership. Okay, the first question that stings a little that we should be asking is, have you ever noticed that rent always goes up? I don't know about you, but I've never gotten a call from a landlord being like, listen, we're charging way too much. Why don't you cut a couple $100s off your monthly rent? It's just not a conversation that happens. So let's talk about why. Okay, rent goes up because of this. US real estate is lauded as the #1 investment of all time. Okay, if you buy US real estate, it simply increases in value. Now, this is really great, right? If you're a homeowner, if you own property, but if you're not a homeowner, you don't own property, this can hurt a little bit. All right, so as US real estate increases, so do your property values, which means your rent increases. Now, if you were to zoom in on a couple of years, US real estate might go up and down, right? But when you zoom out to a couple of decades or a century, it is just a really quickly increasing investment. The value of US real estate just climbs at a crazy high rate, okay? So what does that mean for us? It means your rent is growing at a crazy fast pace. So every year or two, your rent is going up. Now, there is some respite, and that is that your income is also increasing. Okay, on average, income has increased in the US. Now, the trouble is that your income is not increasing as quickly as your rent is. All right, this makes for a really difficult situation. Your income generally increases because you're getting better at your job, you're providing more value to the marketplace, maybe you're getting better jobs, right? But generally, you're working harder and harder. The problem is you have this happen. You see this little green space? As the green gets skinnier and skinnier, it's showing that your rent is increasing faster than your income. So your income isn't making up the difference. You're working harder and harder and harder and having less and less to show for it. That is a problem, right? But some of our consumers have made it all the way to this point, which is when your income can no longer cover your rental payment. Now, our members don't usually tell us it in that way. Sometimes they say they've moved in with family members or they're living in a hotel. But basically, the longer it takes to get out of rent and into a mortgage, the harder it gets because your money gets skinnier. Let's talk about how to get out of this situation. It's a very bad idea to just bet on the idea that you could outpace US real estate. It's like the fastest growing asset of all time. So instead of trying to outpace it, you need to get on the other side of it. All right. The way we do that is instead of rent, you pay a mortgage. When you get a mortgage, your mortgage payment is locked in for 30 years. Okay. That doesn't mean that you have to pay a mortgage for 30 years. It means your mortgage payment will not increase during that time. That's really important because as your income increases, the percentage of your income being eaten by your mortgage payment gets smaller and smaller over time. So instead of working harder and harder and harder to have nothing to show for it, you have the American dream, which is working harder and harder and harder and having more to show for it. That's one reason for home ownership. Okay. That's just the really short-term reason is you really can't afford to rent for your whole life. It's way too expensive. The other piece is something called equity, which we're going to talk a little bit about here. Okay. So let's say that you decide you want to buy a home. I want to show you why it's so important to do that with credit. Okay, so we're going to go through two scenarios. The first one is to buy a house without a mortgage. In order to do that, we have to figure out what home values are going to be. I can't go forward 30 years, so I'm going to go backward 30 years to 1990. And in 1990, median home prices were $79,000. If that doesn't sting a little bit, it should. I'm sure in 1990, we were all talking about how crazy the inflation was and how prices had to come back down, the same kind of thing we're talking about right now. because of crazy high home values. But you'll see how things just tend to grow over time. So the median home price was $79,000. Without a mortgage, you would have to save $220 per month. Okay. So instead of getting a mortgage to buy a house, we're going to save up money every month for 30 years to buy the house. So that $220 per month times 360 months would get you your $79,000, which means you still have to have a payment for your housing and you're saving $220 in a savings account every single month. I think you could actually do it, right? Somehow your income has to outgrow your rent every single month, and somehow nothing can ever happen that wipes out your savings account. But let's say you do it. After 30 years, you're scraping away $220 per month into a savings account and leaving it there, and you've come up with $79,000. Okay, that would feel really good to log into your bank account and see $79,000. Here's the trouble. Here's what would not feel really good. After 30 years, it's 2020, and median home prices are now $273,000 on virtually the same house. So it would take a set of 30 years, and you still wouldn't have enough money to buy that house. Even if you continue to save at that rate, your property values are still increasing. Okay. To buy a house with cash that you saved, you'd have to save up money at an exponential rate. Okay, let's talk about buying that house with a mortgage. Okay, so this time, instead of saving up $220 every single month, we're going to see what it takes to purchase this house with a mortgage payment. Okay, we have the same house, median home prices are $79,000. Instead of the $220 a month, we're going to pay a higher amount per month. All right, and let me explain what that amount is. So we're going to pay $370 per month because we're going to include things like interest, taxes, and insurance. So your mortgage payment is going to be higher, right? And in fact, this is what gives mortgages such a bad rap. After paying $370 per month for 360 months, you will have paid $130,000. You bought the house for $79,000. You paid virtually $50,000 more in interest. It's important to know this because you need to know why mortgages, they scare people a little bit, right? But here's the thing. After paying $130,000, it's 30 years later, and your house is now worth $273,000. This is the power of credit. So you have to ask yourself, would you rather save for 30 years to afford less than half a house? Or would you pay a mortgage for 30 years to own a house 2 times what you paid it for it? That is the miracle of not only home ownership, but home ownership with credit. Okay. So how do you do it, right? Hopefully we're convinced that buying a house rather than renting is the thing to do. That's why most of our members have signed up. How do you do it is a whole other challenge. Okay. Actually getting into and purchasing a home can be extremely challenging. The mortgage industry is a place where you go to apply for a mortgage. People in the mortgage industry, like loan officers, are licensed to do one thing, and that is to help people who qualify for a mortgage get a mortgage. They don't have any venue for people who don't qualify for a mortgage to learn what it takes to qualify for a mortgage. So if you have a really, really good loan officer, they might tell you some things you could do to improve your credit or improve your chances. If you have an average loan officer, they can't afford to talk to you one more minute after your credit score comes in too low. And if you have a bad loan officer, you probably won't even know that you were denied or why. Okay. So the pieces that you have to navigate to become mortgage eligible are just a lot and can be so confusing. That means for us, what we do for our consumers is we help them understand they need to follow the map. What we do at Credit Innovation Group is on your very first call where you meet your credit specialist, they're going to learn what you're trying to accomplish. They're going to look at your credit and they're going to build a map to get you there. Okay. The purpose of that map is to do these 3 things. Number 1, get powerful credit. When you have a really powerful credit score, it can make up the difference on things like not having a big down payment or not having any down payment. You need great cash flow. The trick here is to build powerful credit, spending the least amount of money possible per month. All right. And then finally, everything we do in your map has to be with your end goal in mind. So if you're purchasing a home, we're going to do different things than if you're just trying to get a high score. This is a picture of our actual map that's coming out in our app 2.0 version that will be here in like a month. But each one of these steps in this map you see are things that you need to accomplish to get toward your end goal. Okay, so let's talk about our actual services. This is what you already signed up for. So you have a CIG membership, which is $19.99, and we want to tell you that's monthly for life. Okay, the reason we want to keep this relationship with you for life is because this is not the only time you'll be navigating big financial decisions like this having to do with credit. And sometimes if you're working with us longer than 6 months, there's stuff that you need to work on that we can't even be a part of very much, which we'll talk about why. So in your membership for $19.99, you have access to 3 things, and you can find these in your portal or on your app. But the first is ScoreWatcher, the next is CIG Rewards, and the final thing is Cash Flow Accelerator. We'll briefly touch on each of those. When you sign up for your CIG membership, you also purchase our Platinum services. Our Platinum services is 6 months of payments. The first payment is $179, and the next 5 payments are $129. Once those 6 payments are complete, you become what's called a certified Platinum member. So you have access to all of our services for life at that $19.99. If anything negative pops up on your reports in the future that you want to challenge, if you have questions, if it's time to refinance your house and you just want to talk to your specialist again, this platinum certification keeps you having access to all of that at a very low price. Okay, so membership services. For the $19.99 a month, we have these 3 services. The first is called ScoreWatcher. If you think of ScoreWatcher as a way for us to have a general feel of where your credit's going. So day 1 in ScoreWatcher, you log into your portal at creditinnovationgroup.com and you register your ScoreWatcher account. What that means is they'll ask you questions to verify your identity, and then they'll show you a TransUnion credit report. Okay, that TransUnion report doesn't update throughout your time here. That's our before picture. We want to take a screenshot of where your reports are at today, right? When we do Credit Repair Ninja and things like that, we're going to be interacting with a new report all the time that we'll upload to your profile. ScoreWatcher, though, is your before picture. Then monthly in ScoreWatcher, you have a credit score update. So once a month, we show you your TransUnion Vantage score. It's important you know that it's a Vantage score because it's not the same score your bank will use to qualify you. All right. Even if we bought a FICO score to give you, it still wouldn't be the same score. So all the Vantage score does for us is it helps us see, are things generally increasing or decreasing? If things are decreasing, we know we have to look into what's going on. Usually when someone's in dispute, you see big fluctuations. If someone misses a payment, if a new negative item comes on, we need to know what's happening when those scores are coming down. In addition, ScoreWatcher has what I think is a really valuable piece. It's a credit monitoring tool. Anytime a new account opens or an account comes off, something's deleted, someone tries to access your reports, you'll get notification that happened to your credit. You also have what every consumer should have in 2022, which is identity theft monitoring and protection. Okay, not only can you monitor your social and your bank account numbers and your identity numbers, you can also add your children's socials. Okay, this will scan the dark web and make sure that your information isn't being bought or sold online. Now, if something does happen and your identity is compromised, you have $1 million of identity theft protection to make sure you're made whole should anything happen. And you also have something called a white glove restoration service that helps you make everything back in order and put back together. Okay, that's a lot. That's ScoreWatcher. Okay, let's talk about Cash Flow Accelerator. Cash Flow Accelerator, this tool is a superpower. So in addition to powerful credit, you have to have good cash flow. And when you have bad credit, your cash flow is attacked very first. When you have bad credit, you pay more for everything. Okay. So while we're improving your credit, we need to help fix your cash flow. The Cash Flow Accelerator is a really powerful debt pay down tool. Okay. So it says with the money that you have, how do you pay off your debt the very best way? You can pay off debt based on what will get rid of debt the fastest if your goal is to be debt free. If you need to increase your credit score, you can pay down debt based on your utilization rate. If you are trying to save the most money, we can help you pay down debt based on your highest interest rates first. But when you use Cash Flow Accelerator, it gives you a debt-free date, and every dollar you spend extra toward your debt, you see that date come closer. It's a really, really cool tool. When we're helping people fix their debt to income ratios, this is one of our most powerful tools. Finally, you have See Your Rewards. I'll be honest, this one is just clickbait. It's like the funnest thing to use. You get in and you get to earn cash back on everyday purchases. So if you're going to spend $500 a month at Walmart on groceries, you should earn some more money. With good credit, you're supposed to get a better deal on a better life. So all the money that you spend, you should get the very most out of. When you earn these little pieces of cash back, it plays so well with your Cash Flow Accelerator, because you can see that when you make little changes to add pieces to your debt payoff, it makes a huge difference and really speeds up the process. Okay, that's the membership. So everything we just talked to was the $19.99. Now we're going to talk about your platinum services. Your platinum services comes with a personal credit profile specialist. It comes with the credit building guide, and it comes with a home ready guide for people trying to buy a home. Most of our consumers come to us trying to purchase a home. Many of our consumers just want a powerful credit profile. So if you only want a powerful credit profile, you're going to get a personal credit specialist and the credit building guide. If you're trying to buy a home as well, you'll go through the home ready guide as well. So the first one, the personal credit profile specialist. On your first day signing up with Credit Innovation Group, you'll pay $19.99 to start your gold membership. Then you will be introduced to your personal credit profile specialist. Your specialist has to learn what you're trying to accomplish in order to build a map that's going to get you there. So not only do they go over your credit report and learn what's hurting you, they also learn what's helping you and what we can do to optimize it. They also learn what you've done in the past and what's gotten in the way, or what you need to do in the future to make sure you get to your end goal. The very best thing they do is they meet with you and build a map. That map is important because the rest of our teams have to deliver it and get you through each and every step. So if you see an email that says map step, take note, get into that email, do everything it said to do. And the more you'll accomplish these things, the closer you will to get to your end goal. Okay, next is the credit building guide. We say we sell the credit building guide and it's packed full of stuff. The credit building guide is made up of all the tools that we need to repair, build, and leverage your credit. But it may or may not be necessary for every single person. Like your map might have 2 of these things in it. My map might have 10 of these things. Okay. It really depends on what your specialist builds out for your map. So I'm going to go over each of these items and help you understand kind of why they're in our product offering. Remember, if I could just tell you that credit repair by itself could help you achieve your big financial goals, I really wish I could. But getting rid of bad items or challenging negative items on your scores is not going to get you a powerful credit profile. However, it can be a very powerful first step. Okay, so our first one is Credit Repair Ninja. Credit Repair Ninja is just crazy good credit repair. Most credit repair companies charge you a monthly fee for as long as it takes to dispute the items. The problem is that means they make more money the longer it takes to challenge your items. Because we're charging you for only 6 months, the faster we get this done, the better for us and you. Okay, so step 1 is to get into your reports and challenge anything that is unverifiable, misleading, things that are harming your credit profile that really shouldn't be on there, and seeing what we can get off, right? That's the first step. The next piece is going to be what we can do to optimize and build, okay? So for example, Student Loan Ninja. 30% of all of our consumers have a student loan. This doesn't necessarily mean they have bad credit, but student loans can be really tricky, okay? If you default on a student loan, you can't get a mortgage, and it takes a rehabilitation to reestablish your student loan, and that can be 9 months long, and you have to pay crazy fees to student loan departments or student loan companies. Our Student Loan Ninja helps people with, at no additional cost, make sure their student loans are in a way that it's helping their credit rather than hurting them, and that they can actually get a mortgage. Because having a student loan doesn't have to get in the way of owning your own home. The next one we have is rent reporting with CRBC. We've partnered with a company called Can Rent Build Credit. And what we do is we help people report their biggest monthly expense. Have you ever wondered why paying your rent perfectly on time doesn't improve your credit? The rent reporting tool can report your monthly rent and up to 2 years of history to your credit reports. This is crazy important because we have to verify with you and your landlord to get something onto your reports. Now, the neat part is the second you go talk to a mortgage company about buying a house, the first question they'll ask is, how have you paid your rent? They need to see that you've been paying rent for at least 12 months, or they say that you can't get a mortgage because you'll have quote unquote payment shock. Payment shock means that you're not used to making a housing payment and all of a sudden you have one. All right. So this is a huge piece for mortgage companies to make sure that you qualify for a loan, but it's not usually reported. It's a great way for us to add a big installment account that looks really great on credit, that is really the credit that you deserve anyway. And then of course it doesn't hurt your debt to income ratio because everyone knows when you buy a house, you stop renting. All right, the next one is Credit Card Ninja. Credit Card Ninja is really about revolving accounts. Okay, so everything from helping you add new revolving accounts to working with the current accounts you have. We have services, we have a list of trusted cards that we help our consumers look through. It could be anything from secured cards where you have to put up the money for the card, or unsecured cards that are more powerful on your credit. We can teach people how to become authorized users and avoid scammy and costly tools that get people free credit. The Credit Card Ninja is to take the cards you have and make them better, or help you establish credit for the first time. In Credit Card Ninja, we'll also teach you about utilization rates. Okay. One of the most effects that a credit card has on your score is how it's utilized. This Credit Card Ninja tool is really helpful on that side of things. Next, we have Monthly Bill Ninja. So when a consumer comes to us and has established credit with bad credit, for example, you buy a car from a buy here, pay here place because you don't have great credit, they're often paying way more than they should be on the same stuff that you and me might be getting for a much better deal, right? When you have someone who has dramatically improved credit, they can save hundreds of dollars on things like car loans, auto insurance, stuff like that. So Monthly Bill Ninja is there to help you use your good credit to fix your cash flow, to keep more of the money that you're bringing in. Okay. Then we have Credit Strong. Credit Strong is another installment account that helps you build credit by agreeing to pay yourself into a savings account. We have some people who don't want to create more debt to build credit. This is a great way to build wealth and build credit. All right, the final piece we want to talk about is the Home Ready Guide. This part is insanely important. Having a really good credit score will get you in the door with a lender. Okay, the very first thing a loan officer will do is pull your credit. If your score is high enough, now we have a lot of other things we have to go over. If your score is not high enough, that's the end of that conversation. When we are working on someone's credit, we also want them to be working on our Home Ready Guide. Okay, you go through something called the Home Ready Questionnaire, and we'll actually ask you a lot of non-credit questions. We know what we're doing on your credit reports. There's other stuff that it takes to qualify for a mortgage. So these might be things like, are you trying to get into a home with or without a down payment? If you don't have a down payment, you're going to need much more powerful credit or a higher credit score, right? If you do have a down payment, you might not need a dramatically higher credit score. You might just have to have good debt to income ratios. So we start talking about the things that aren't just your credit and your credit score. Once you meet all of our Home Ready milestones, that's when we do a credit audit and we introduce you to one of our lenders. And our lenders are fabulous. They keep us posted on your progress. They let us know by the time you're out house shopping, and it lets us reach out to you and ask you to send us a picture of you and your family in front of the home that you're buying, which is one of our very favorite parts. Our rent to own guide is very similar. When people are coming to us looking to establish a rent to own, the very first thing they need to do is get a real understanding of what it's going to take to qualify for a mortgage. If you're trying to become a homeowner via rent to own, the worst thing that could happen is finding a rent to own home and then not qualifying to buy it within the period of time that you need to buy. The rent to own guide is going to start with the same thing. You go through the Home Ready Questionnaire and get a really good understanding of what it's going to take to qualify and buy that home. Otherwise, you're going to end up renting a house at a premium just to not buy it in the end. Once you make it all the way through here, of course, we ask that you send us your pictures. We have a wall in our office called our wall of home ownership, and it is our favorite thing. Every time we get a new picture up on the wall, we celebrate and there are balloons and it's amazing. But we do ask that once you get into a home, send us your picture talk to us about it on our Facebook page. We have a members only group called the CIG Credit Village, and we have our members interacting with each other, talking about their journey to powerful credit and homeownership. And we love to invite you to that.